Hi, thanks for tuning in. This is a weekend review for the week ending February 17th, 2023. February options expiration is in the books, third Friday of every month. And you got an inside week across the board. So they collected the premium and the game moves on. If you notice, most of these charts we're going to look at today are inside weeks. So Q. SPY inside doji above the 50. Q inside double doji above the 50. These are bull flag patterns on all the charts. SMH broke the previous week low, closed inside. IWM just completely an inside bar. ADX above 30, PPO above 0. This is an uptrend. Financials, same thing. Financials, ADX is only 20. Big range, really going back to March of 2022. You can go all the way back to April 2021. And really the financials are really interesting. We pull up the quarterly. Is all of this just a big throwback after finally capturing that huge $31 level? IYT inside week. XLE broke bear 84.52, closed at 84.49, so closed below the previous week's low. Outside bearish reversal. XLE looks like a big distribution pattern to me. And you have momentum rolling over. Consumer discretionary, which is a early cycle sector, since the October low, is doing very, very well. Inside week. Digesting the 50. The slope of the 50 is down. That is the problem. But the 10, the 20, the 5, the 200 are all up. So just watch to see how this bull flag posture on really every single chart plays out. We can dig in a little bit more here into SPY on the daily and see nothing wrong. Now PPO could reset to 0. It's at 1. That can happen in a couple days. Also, what that means is pullbacks into 394 are likely to be bought. The bull cross that you just saw, followed by a sell, is pretty normal. You're in a correction now, going back to February 1, so the entire month. So if you zoom out to the monthly, you should see a doji, and you pretty much do. And it looks like a firm rejection here at the 20 on the monthly. One thing to note on the monthly, EMA 5 just crossed above SMA 10. That is the short-term buy signal on the monthly that we like to look for. And you've got this going on pretty much all of the majors. So just zooming out to the monthly, you had momentum extended at 11, pull back to 0, went negative, curled up, histogram flattened out, ADX flattened out, EMA 5, SMA 10 bull cross, and that tends to be what you have every time one of these major moves starts. And then the line in the sand is really the 5 and the 10. So price could come all the way down to 182 on IWM and it still be very bullish. 179 even on the monthly time frame. Right, these are monthly buy signals that just were generated on all the charts. QQQ is lagging and is doing it this month. Let's take a look at some stocks. NVDA pulling back to the 20. PPO rolling over. This thing has started her correction. She's now going to correct this move. And since this is wave 3, 195. The 382 is on the table, and the 618 is less likely. And as you can see, that 50% retrace, the 618, or sorry, the 382, they all come back here to this previous area of resistance and this major pivot back here from July, August of last year. This is what's created the neckline, and any throwback or test on the weekly, monthly chart would be a buy setup. And this arrow is pointing out the area we're looking to test. It's possible she comes back and even tests this channel and the 50 period moving 50 week moving average by the end of February. That's definitely possible. And as low as 178, but unlikely to get past that 194 level that I threw out there. 195 to 188. Take a look at CROX. CROX put in a huge reversal candle and then closed inside. 130.46, 131. Weekly just churning along. I mean, really momentum, as you can see, is waning a little bit, but PPO continues to set higher highs. ADX is confirming trend mode higher. Pullbacks into the 5 and the 10 have been bought, and the uptrend continues. If you look at this monthly, pull back to the monthly 50, reset to 0, curled up, trend mode engaged, 34 ADX. So yeah, this is trend mode higher on the monthly, above all the moving averages. Nothing is wrong here. Could pull back to 106 and be perfectly healthy. You wouldn't expect the 10 to get hit right away, right? Once these things get in trend mode, they just ride the 5 on the monthly. It's just what has happened until you get the 510 bear cross, test, and then no real turn and roll over until back here, then the back test, and then the real move. So I'm looking for a double top on CROX. Another name I've been watching is LII. It's possible this thing pulls back all the way to 14 or 18. In my book, 18 is very, very healthy and would be normal garden variety pullback on the monthly chart to come back in and test. Even in March, that would be fine. And this quarterly chart is showing the ADX is at a trough and is likely to flip, and this is where you get big, big moves. You come down to a trough in ADX and then you flip. That's when things start to trend for a while. Until when? Until it hits a peak. These peaks have been lower, but you're still at the trough. Above this $15.99 level is a breakout. Okay? Anything above $16 is a breakout and targets way higher prices. 42 at minimum. But either way, this is the quarterly chart. The daily chart could pull back to the 50 and that 1820 level and be perfectly normal. PPO gets back to 0 from an overbought condition of 12. Price reverts to 1820. Pays a visit to a former breakout area, and you get your throwback set up on the weekly, monthly time frame. And that's how fractals work. Let's take a look at some intermarket analysis and wrap up this video. So here's the dollar. Dollar put in 510 bear cross sell signal on the monthly. Still in an uptrend. PPO has not put in a bear cross yet, but the 510 did happen. Weekly chart could be getting rejected here at the 50. Could rally back up to the 20 and get rejected. The slope of the 20 is down. The 5 and the 10 just put in a bull cross. We'll see how they hold this 27 level. Looks like we got to turn after hours on. Yep. Put in an ABC structure. Look for this move to end above 28.40. So we're at 28.30. So yeah, I mean, could go to 28.60. Move could be over already. And what does that mean for gold? Gold PPO reset to 0 from an overbought condition of 2. The weekly chart did put in a 510 bear cross. Reverting to a rising 20, should catch a bid here at 166 to 170. Not a bad place to start looking at longs in gold. Structure-wise, 1, 2, 3, 4. If she comes up and puts another high in without touching 166.23, that could be a 5-wave move off the lows. Still puts in a lower high relative to 193. And then we get the pullback again. That wave 2 setup, wash everyone out. And then gold leaves the station. I mean, that's one possibility. Big cup and handle chart here on the quarterly. But got to see them close above 170.61 by the end of March to see any type of upside continuation. So if the dollar is rallying and that's hurting gold, TNX came up and filled a gap. Is this a big ABC corrective flat? Big 5-wave move lower. A, B, C. And now we're getting that symmetrical 5-wave move lower again, which would be a correction on the weekly and monthly time frame. And just as you have this back test happen, this is the cover of The Economist, why inflation will be hard to bring down. Just came out the 16th. And so as we look at TNX, we realize this could really just be a flat back test of this rising channel breakdown. Weekly PPO is resetting to 0. Don't have the bull cross. ADX is below 30, which means no trend. So the trend is dying on the weekly. You look at the monthly, still in a very, very strong uptrend. So this could certainly march higher. Just you have to assume it can march higher. This is a bearish reversal candlestick from Friday, but still above all the moving averages in an uptrend on the daily chart until otherwise noted. And the impact that this is having is really being felt on TLT, right? So when we looked at all the other charts and we saw inside weeks, you now look at the bond market, which is much more negatively correlated with the TNX chart we just looked at, and you can see the effect of that strength in TNX. 3 down weeks, or second down week in a row. And if you look at this, pulling back to what is likely this gap on the weekly at 99.56. In what is still a very, very strong downtrend on the monthly. You notice you don't have the EMA 5, SMA 10 bull cross here. So yeah, that's what you're seeing with rates and their impact on bonds, and the bond market not really impacting the stock market here that much. Like I said, with the inside weeks. So this negative correlation that you had with rising rates and SPY going straight down, we're not seeing that anymore. And even with 3 straight up weeks in the dollar, SPY is up 3 weeks in a row. Really, during that same 3-week period, SPY's up from where she started that 3 weeks ago. And so when you look at it, that correlation between equities, bonds, the dollar, interest rates isn't really there anymore like it was in 2022, like it was before all the breadth thrusts occurred. So yeah, like we talked about, economists, you never want to be on the cover. Just like back here, how high will interest rates go? That marked a short-term peak. Look at performance, ACLS, Airbnb, WRLD, NVIDIA, Bitcoin, ARK, Seadrill, STX, WFRD, and CRISPR, about top 10. If you're really only up a few percent on the year, you're dramatically underperforming the individual stocks. As you can see, all the stocks kind of peaked here January 27th and have been putting in lower highs ever since. Less Airbnb, which had an earning event. So there are some exceptions here, like ACLS has continued to march higher, but most of these stocks put in some form of peak here January 27th. You look at some relationships here: consumer goods versus financials. Consumer goods has been getting destroyed since October. And if you look at this, is this just one big corrective pattern and now we're resuming an uptrend? Nope, that's not what I see. Especially if you put the bands in, you'll see what I'm looking at. Yeah, it's a downtrend. And the momentum here is telling me that it's a sell the rally environment. And financials are favored over consumer goods, consumer staples. Consumer goods versus consumer discretionary. Since, the start of the year, consumer discretionary has been underperforming consumer goods. Healthcare versus XLF. Healthcare has been dramatically underperforming until just now, and now she's starting to outperform XLF. Healthcare versus consumer discretionary. Still favoring consumer discretionary. Basic materials versus XLF. No real trend. But right now, downtrend. Favoring financials. SPY versus IWM. Nothing. No real trend. Favors SPY in the long run. But since 2022, it's kind of been just rotation. IWM versus QQQ. Since the beginning of 2021, it's been pretty much an up grind in favor of IWM over QQQ. But as you can see now, back below these moving averages, and this 200 is sloping down. So this is a long-term downtrend, meaning that in the long run, you'd want to own QQQ. That really that wraps up the video. I'm gonna just keep it under 20 this week. If you like it, hit the like button, subscribe to the channel. See you next week.